Alright, was good, VIP. I've been promising a lot of videos and weekly analysis, and I've just kind of been slacking. So I decided to do everything right now in this longer form video. I'm hoping I can do this for 20-30 minutes. I'm just gonna aim to backtest some macros and then go over the weekly analysis. So we already have data for Monday, so it's kind of nice that I didn't get to do the analysis just yet until today, because now we're not rushing into the week to take any trades. So just starting from the weekly on XAU USD, we have this weekly inefficiency. It's the only weekly concept that is valid for use. There's no breaker block here, so this high isn't going to be respected. The only weekly concept that is going to be drawn to is this weekly inefficiency right here. So in the span of 1-2 weeks, the direction of gold price will draw to this within 1-2 weeks, 100% of the time. I don't see anything else that price could reference. Of course, if there's some strong fundamental news, we can still get a run towards buy side, but it's likely to sweep this first just because of this new low that it created here. This low ended up missing the weekly fair value gap, leaving all these lows untouched. So right here, you see all these lows accumulated and this low. That was the extra cherry on top that market added. Going into the daily, I already saw from Monday's range that we had this order block here on the daily chart. So starting off on the daily, I have this fair value gap and this bullish candle as an order block. And you can see that starting into Monday's range, we wicked really high up into this order block. And when I marked out the order block candle, it was just to the midpoint. It literally traded to the midpoint of this order block and pulled back, closing below it. That's pretty much institutional order flow entry, Joe. The institutional orders definitely got filled up here. They got the perfect entries. So you can just kind of observe this and see that market's really tending to go down. So even if during today's Asia session we end up pulling up, more likely than not, it's actually going to draw down here. I'm even aiming for this during today's Asia session. FEG. There you go. That's going to be my target. We have this daily. So these are the concepts that you should mark out. Kind of keep it simple. There's two ranges, right? There's this fair value gap, this order block, right? These are the bullish targets and this is the bearish target, plus these lows. So if you were just to keep it simple, this is all that you'd mark out on gold and kind of relax for the week. Let it trade into one more range. If it trades back up here, you'll have a premium entry for a sell. And you just sell down here. And if it trades down here first, we're probably most likely going to buy up, because August's month is also supposed to be bullish. We didn't get as much buy side as we expected in July. The first time that it swept all-time highs. Sure, that was a good push, but it shouldn't have ended up on a bearish note. So there could still be some strong fundamentals that completely displace this price up. And if that does happen and it sweeps this high, we can potentially use this order block range to go for buy side. But unless that happens, these are the only two levels that we're looking at. How do you avoid getting caught up if something like I just mentioned happens? You just don't trade when news happens. Get out of your trades before news once you're in profit, and let news do its thing. So this is the range for gold and going into NASDAQ. So last week, Chris mentioned the bearish breaker block right here, which price ran down from upon the new week open. We ran down. This week, you can already tell from the daily that we're consolidating around this range. We're pulling up from it. This isn't saying that it's going to be bearish. However, because of this move, we can still expect some more sell side into these weekly fair value gaps. We want to see how it references this weekly fair value gap. I'd honestly say it's a pretty bad range to trade until it either goes lower or it goes higher, because you're stuck between two weekly fair value gaps here. I would overall be bullish though, and I'd just watch for this fair value gap. We want to see maybe another tap into it and you can get an entry from there. or on the lower time frame if it closes above some inefficiencies. Remember to only trade NASDAQ during New York session, because during Asia session it typically only consolidates. Like if we hop into the Asia session, there's no volatility in Asia. There's no volatility in Asia here. There's no volatility in Asia here. But it's amazing for New York. So you can see that the power of three, the accumulation, manipulation, and distribution phases all occur during the New York phase. And you can reference the Asia session liquidity or Asia session accumulation as the liquidity targets for your New York range. You can see though on the lower time frame that we have been respecting this daily fair value gap. We even already tapped into it, so I mean that's pretty clear to me already that it's going to be pushing for buy side. That's the last cherry on top right here. We have equal highs. So going into a lower time frame, the week's already started. Look for a weekly profile. Trade it during New York session. That's going to take you up to these equal highs. We already tapped into this fair value gap again. We are respecting these order blocks and this 4-hour fair value gap here. So what I want you to do is just to mark these out for NASDAQ and aim for these equal highs. That's all that you have to aim for. I'm going to keep an eye on this and see how price reacts to this range. This is something that's going to go into my saved messages so that I could keep an eye on this. Boom. There you go. So that's kind of the overview for NASDAQ and gold. Now hopping into gold, we're going to do some backtesting on macros. One of the VIP students was showing me the macro that they traded today. I'm not sure why he said this, but he might have had the wrong idea of how to trade this macro. So obviously, just on a daily perspective, right, we're inside of this bearish fair value gap. And we're trading around this bullish order block. That's why I didn't take too much trades on Monday. You don't want to blow your account at the start of the week. So now going on a lower time frame, right, you're looking for your entries. And going into the 1 minute, if you wanted to trade the New York Open macro, which is from 650 to 710, what would you look for? You'd mark out your 650 to 710. And going into this, right, you go back into the replay mode and say you're right here. New York's about to open. Obviously, for me, this isn't a good time to be trading because 6 a.m. in my time is 3:43 a.m. I'm not going to be up for the New York Open. I'll trade the expansion macro and the silver bullet, and then some PM trades that I might take. But I'm not going to trade the open. Anyways, if some of you have good time zones, then maybe you will trade it. So going into this macro, you already see this liquidity that's been built up right here. You want to see as soon as New York opens, we're going to get some liquidity, some volatility that's going to sweep the buy side, sell side. So just going into it, we already get some bullish candle, right? So right off the bat, we already swept this. We are likely going to be drawing up to this high. And macro starts. Boom, we disrespect the bullish FVG right here. Just going to get in because I don't need to anticipate it to sweep this high if I'm in a bearish daily fair value gap. And what am I going to aim for? I'm just going to aim for the lows. Boom, I'm out. Now, let's look at the next confluence that we have, right? We have the macro open. What else do we have? We have the macro close. Macro closes, sweeps all the sell side here. We sweep the sell side that happened right inside of the macro too. It closes on a bullish candle. When it closes on a bullish candle, and you may want to get some buy side. I'm not saying that I would have been buying, but say you would have wanted to get some buy side. Boom, you buy, secure that stop loss, target the nearest liquidity. Boom, swept the nearest liquidity. That's how you trade macros. There's the open and the close, but the opening trade is all that you really needed. yes, I factored in for the high here that could have potentially gotten swept, but because the macro opened as soon as it swept this liquidity, it's likely to just run right away. Plus, we're in this daily fair value gap, so I wouldn't have ever even bought right here. I was just showing you that the close also has a strength to it. As soon as it closes, it wants to like fake you out. It's an algorithm. It runs to its target, then it stops out everybody that might have gotten in late. Because that's retailers. They're trading based off of momentum. They see this momentum towards the sell side. They're like, okay, we're going to start selling. Nope. Macro stops them out. Okay. That's kind of the response that I have to the student. Like, he tried to take a buy from here. So the overall answer to like why his trade just didn't go right is, first of all, bias, right? We had the daily fair value gap. That's the first thing. Second thing, even in the close, you don't really want to be buying because we're inside of a daily fair value gap. But if you were to enter as soon as the macro opened based off this liquidity, factoring in for the highs here, so it could potentially turtle soup those highs too, you just factor in for those and target the lows, you would have gotten your trade. Boom. You would have gotten your full, how much pips is this? 50 pips. You would have gotten 50 pips. Let's go further into today's range. Okay, next thing. So we did just leave the daily fair value gap, right? We already tapped into it once, but if we sweep this low, look at what time it is. It's 7:50 to 8:10 almost. So this is already the macro, 7:50, 8:10. Maybe I want a little bit of a deeper sweep just because this is a significant low. There you go. We actually swept the sell side. See, I'm not opposed to trading a macro here. I would just aim for this high instead of the high up here. I mean, even if we take a loss, we're already up. Let's see. Boom. Instant. Gave us the nearest liquidity. That's another trade added to our position. Instant reversal. Why? Because we swept lows, and macros are likely to reverse when we sweep lows. I'm just going to double check that everything's working. Okay. That's all I really needed to see. It could potentially still tap into this daily fair value gap again. So that could have been your target for the macro. Let's see. Yeah, so it was drawing into this fair value gap again. But I'm fine with this, right? This gave me the entry and the exit inside of the macro. Like, I got my entry without ever stressing anything. Okay, let's look for the next macro, just because we're backtesting macros today. Okay, we're inside of the, look at that, beautiful pullback from the midpoint of the daily fair value gap. We're going into the next macro. So, two of the previous macros, what were they? Manipulation macros. Sell side to buy side, right? Buy side to sell side. Alright, I said that the opposite way. Anyways, when, just based off of experience, when the last two macros were manipulation macros, we already traded into this nice zone right here and we just left this. I'm probably not going to target this high again. I'm going to target this low. So I'm fine with it just running straight to this low. Let's see what happens as soon as the macro starts. Okay, boom. We're inside of this fair value gap. Like I said, this high is pretty clean. It's from the midpoint. I probably wouldn't look for buy side here. Okay, let's let this potentially sweep or close above this fair value gap. Okay, swept the buy side. I actually think I remember that this just ran up for, yeah, it ran up to fill the whole thing. Okay, so the entry would have been from the close here. I'm just going to pretend like I didn't trade this. But if you were looking at this, I just got distracted real quick. Somebody was knocking on my room. Okay, so we got this equal lows right here. Right? So if you didn't end up taking a trade from the open because it didn't give you like a good sweep, or even right here, look, it swept the high and then ran to this nearest low. But say you didn't take the trade and you waited for the close would have given you your trade, because you see these equal lows, right? Equal lows are really likely to get swept, like swept hard. That way they're not equal lows anymore. You get me? So if you saw that as soon as the macro ended, you could have gotten in your trade. Watch how this disrespects these equal lows. Well, I guess it didn't run on it right away. But there you go. We get that jagged move into the macro. We also get some accumulation. So now we're likely to get some... Oh, let me put that back. So now that we got some accumulation, what can you expect? What comes after accumulation? Manipulation, right? At 10 a.m. today, we had news. So I was obviously avoiding that 10 a.m. news. It's about to start right now. So we swept the buy side. We're likely to sweep all the sell side here. So I'm just going to wait for that to happen. I'm not going to be looking for any trades yet. 10 a.m. Yeah, today's 10 a.m. I wouldn't have traded just because of the risk of trading that news. Okay, what happens? We're going into 10:50 now. We can get a macro entry here. Like, even without looking at what happened or what it's inside of right now, what do we have? We have a low created before the macro started. Then we have the macro. Boom. Get into a buy. Aim for the nearest liquidity. Secure the stop loss. Let's see if it gives it to us. There you go. Sell side swept. Macro opened. And we just targeted the highs here. That was a simple macro. Let me mark it out for those of you that can't see the bottom of my screen. 10:50 to 11:10. Boom. Okay, we get some more sell side after the macro ends. We're now at 23.72. So like I said, when we got this accumulation, only the sell side was swept, and I was anticipating the buy side to also be swept, though it is from the daily fair value gap, right? Oh, let me not spoil anything here. That was a close one. Okay, let's just let this range correct itself. We're not going to anticipate anything until we get some consolidation and manipulation. Because if you try to trade after a big jagged move like this, it can give you another big jagged move either towards the upside, towards the downside. You'll get cooked. Why would you do that when you can just trade the distribution afterwards? So accumulation. Let's get some manipulation of this. Okay, we're inside of the PM session almost. We're building some liquidity for lunch hour. Let's see, lunch hour raid model. So our lunch hour raid model is 1250 to 110, targeting the lunch hour highs or lunch hour. I guess we wouldn't really target lows. It would just be targeting the lunch hour highs if it fits the criteria for entry. So obviously during the macro, we'd want to see it push away from the highs and then go sweep them after. So let's see, from 12, the highest point is right here. This is the highest point from 12. Let's see if it goes any higher. Okay. 1250 to 110. Oh, what's going on? I just lagged a bit. All right. I mean, going into this macro, we already swept the buy side, so maybe I'd just get in at the close if it sweeps the sell side. I'm lagging pretty bad right now. Okay, but I'm going to wait for this to happen. I'm still going to take a trade because I think that it's just building to sweep these lows and then going higher. So I just want to see it sweep the lows before running on higher. And we didn't get the sweep. Okay. So this wasn't a macro that I've traded. Like some people say, how do you know not to trade the accumulation ones? The accumulation ones don't even give you an entry in the first place. I would definitely not have traded this because it's not really a sweep of liquidity when it's been consolidating. A sweep of liquidity when it's been consolidating is sweeping the external ranges. So whenever there's liquidity like this, like inside of this range where there's a high and a low, you just want it to leave the range. Maybe we come for the sell side here. 2374. Okay, it's now the next macro and we swept these equal lows. I mean, even if it's likely to draw to these lows, I might have taken a trade here. Let's see. 150 to 210. So we have these equal lows. I mean, instantly right off the bat, that probably is going to be a good entry for this high for sure. I don't know about this one, so we'll just let another candle play out just because I'm not sure. Okay, I mean, that's enough for me. Secure the stop loss. I'll aim for the fair value gap just to be safe. And we got out. Okay, price wanted to run lower. Maybe it's going to draw into these lows here. So let's just let it run. I think it can still go lower here. New York close. Okay, let's look at power of 3 if I have this. I don't. I have it. Okay. Power of 3. So this is how the daily candle is looking right now. So obviously we want this daily candle to close bearish more than we want it to close bullish. So we obviously wouldn't want it to be up here, but that's what I was thinking, like as I was just watching the market today. But it ended up running up and making it look more bullish. Look, it's like the dumbest daily candle close today. I mean, that's it for me today. I took my loss and that's it. I got some nice macros in these ranges. It seems it deletes it. And now we're approaching too late into the day to actually trade anything. So I wouldn't have taken any more trades. I would just watch how the daily candle closes so I have more information for Asia. So let's go look at the daily chart. Exit the replay mode. Oh, sucks that it didn't show me my stats. Okay, this is how the daily candle closed. Let me turn this off. It closed with these fat wicks. So what am I expecting now? I'm expecting this next daily candle that just opened. Close this. That's annoying. I'm expecting this next daily candle to correct one of these wicks. I want it to close over it completely. Either towards the downside, and we can definitely expect it to run towards this weekly here, or towards the upside, and we can definitely expect it also to trade from the weekly after it runs into this. Maybe we might get both sides, right? So in expecting the power of 3, we want to see the manipulation first, right? It's going to accumulate, and then Asia session is going to start. We're going to get some sort of manipulation. Once we get that manipulation, it's going to be clear what side it's going to. If it runs up first, we're likely going to run down. If it runs down first, I'm probably not going to take a trade. That's kind of my thought process. I'm going to do some macro testing inside of New York session of NASDAQ. So let's hop into this New York session. Let's mark out the concepts nearby. So obviously we have, actually I don't want to look at that. Let's look at this one. The first time that we traded into this midpoint of this daily fair value gap. So let me go into replay mode. Boom. So this daily fair value gap, how can I dive into a lower time frame only knowing that there's a daily fair value gap there? I'm going to first look at the higher time frame thing. So we have 4 hour, right? We have the 1 hour. 1 hour doesn't have anything special. And then 30-minute, we have this order block. So from the 30-minute, I'm just going to go lower. We see that on the 15-minute, we had a bullish fair value gap right here that was created. And price disrespected it here. And the next wick tapped into it here. I'm already bullish from this institutional order flow wick right here. All the institutional orders got filled right there from that wick. So even though I'm not in right here, I can just look at it and see that it wants to push lower. It wants to push for this sell side, right? So that's what I'm going to target during the next macro that I get here. So now I'm going to go in the 1 minute time frame. Boom. What do we have? 630. So the first macro that we're going to end up trading is going to be the 650 to 710. Basically the New York opening macro, which is a solid macro. Let's see what happens. Boom, we tapped into it again. That's some institutional entry stuff. Okay, and macro starts. Tapped into it one more time. Let's wait for one more sweep. Come on. There you go. We got the sweep. Am I now going to start buying because it's a bullish fair value gap? Nope. Because we swept this and New York just started. What happens when New York starts or London session starts? We typically get a Judas swing. We get a fake out move. Boom. Get into a sell. Secure my stop loss, 10, 20 pips. Damn, I'm risking 2,000. I'm risking 2% right there. And we're going to target the lows. So obviously we're, like I said, we're drawing towards the, what is this? Is this the 30-minute order block? I'm not sure what oh, just the lows. We're going to aim for those lows. That's what I mean. Okay, and we're respecting this 30-minute fair value gap. Not fair value gap, order block. So it's fine if we run into the midpoint of the order block. The order block still being respected. We're going to sell from this macro. Boom. Typically huge moves like this tend to get the downside as well after. You don't want to be catching the knife like when it just flies up again, just like what just happened right now. But because we're bearish, I'm still going to enter the sell once the macro ends. Just because I am confident in my bias. I'm confident in my targets. Okay, there's no confirmation yet. I'll wait for it to close over this bullish fair value gap and then I'll get in. Not yet. Not yet. Okay, it closed over a new bullish fair value gap right here. I'm just going to get in because I'm going to expect that it's also going to close over this one and just run from there. So same kind of target. Even if I took that 2K loss or 3K loss right here, if our target's correct and it draws down deeper into it, we can make up for that. No problem. Okay, we're already this far from the close of the macro. We're running into the next macro. So it's already 750, right? There's no liquidity that was really swept here. We're going to aim for this at the least because now we're in a macro. We might get some buy side. Okay, I mean, this macro ran up, swept this buy side here. That's enough for us. Let's just write it down. Okay, news hit. I mean, I definitely wouldn't have been trading if I paid attention to the news event here. But we ended up getting lucky and getting our fill before the news ran. I do want to show you guys how to trade after news, though, right? News happens, as Christian was mentioning in our stream today. News happens and creates these fat candles, right? What do? You expect the market to rebalance these candles. So obviously, look, what do we have now? We have equal lows right above the midpoint of this fair value gap. Come on, if it's not as clear as day from that, I don't know what is. Look at these equal lows. You think it's just going to leave it like that? Look at these equal highs. Boom. What did we just sweep? Equal highs. We disrespected that equal high. Like we made it look no longer like an equal high. We ran up above it. Maybe we get one more wick up here, and then I'll sell from there. There you go. 850. We're going to sweep this high right here, and that's where I'm going to sell. There you go. Beautiful. Look, there's another equal high probably on like the 5-second chart. Look at that right there. And we just swept that too. We're inside of a macro, 850. 850. Look, it consolidates before that, but all of a sudden it starts running. Why? Because macros exist. They actually are a concept that works in the market. Let's risk another 2.5K. Okay, consistent risk. We're obviously aiming for way lower than this because of this news. Like now we have to rebalance all this action that happened during news. There you go. I'm not even worried. I mean, macro pulls back and closes. That's what we want to see. Look at it respecting this for value gap. So everything on the 1 minute after news is usually insanely accurate. Like it's all precise to the tick. Yes, we could have gotten out here, but I just don't want that stress on me, you know? I'm just going to trade it. Just going to let it run. Let's hope it doesn't stop me out here. Boom. So just because I kind of got this iron mind psychology, this warrior mind, as I started calling the psychology that I've been teaching, it's like the wins confirm my pre-existing bias that I'm a successful trader, that ICT works. And therefore, whenever I am in a trade, I'm pretty confident that it's going to do what I think it's going to do. And that's why I'm able to hold it. We swept these highs. We can take off half of the position. Right, so let's take off 50. 50, buy. Boom. We already got partials. Now we can even move our stop loss to break even. We're already secure under this IFEG. By the way, when market closed on top of this IFEG and used it to run higher for the buy side here, look what it did. It ran down, then closed under it, respecting it again. This becomes a reaper. And you can see after it disrespected the IFEG, this now became a reaper. And you can see market wicked up into it and melted from it to our buy side. So let's keep going from here. Okay, there you go. Look at this rebalancing of price action. This news event here, creating these equal lows, like it was too clear to me that it was going to run to this midpoint. Let's just ignore what happens. We don't even want to trade the next macro because we're already in the macros. I'll take off another half. Why I'm not going to take off the full position is because if I hold the half to the midpoint and it does end up running to the midpoint, I'll make more. Maybe that's all I needed to pass another account, right? Just unplug my MacBook. Maybe that's all I needed. So that's what I did. I just held the position. Let's take off half. Boom. We took off the first half at the liquidity here. Took off the second half at the liquidity here because we might get a pullback. And look at that. Straight to TP. Closing the rest of the position. Boom. There you go. 16K day. We're balling. That's how you trade macros. That's how you use macros with some pre-existing bias and get macros for a longer trade. Like sure, this might happen. And if you're expecting your stop loss to be 10 pips and hold it for 50 pips, you're going to get stopped out more likely than not. So give it some room. I gave it some room. My stop loss survived and I was able to ride it down to each flow. I'm done for the day. Right? I did tell some of my students though, if you lose your trades in the first session, give yourself the permission to trade the next session. Because if you trade the next session, you can make up and end up in a positive day. Sure, if you end up losing the next session, you will be down, but you were already down, right? You give yourself an opportunity to trade the next session, make up for it, and also maybe learn something from the next session. Maybe trade later with a more clear head. If you know ICT and you know how the market works, you're going to get the price right more often than you'll get it wrong. You'll be right more often. Like sometimes we're wrong just in expecting buy side, but that's not the market's fault for us being wrong. That's our fault for being wrong. That's our fault for anticipating the market in an incorrect manner. Okay. Let's backtest one more session, and then I'm going to post this video for you guys. So we backtested previously, market running into the daily fair value gap for the first time. Let's look at another example. Okay, let's look at this. What do we have here? So we have a 4-hour fair value gap. I'm just going to remove all the macros that I marked out. Okay. So what I was drawing my attention to, or your attention to, what caught my attention, is this high right here. Boom. That high right there. And this is also likely to sweep this high just because of how it missed it by a little bit and it created an equal high. This is going to be reference for price at some point. So like we were just looking at, the daily fair value gap that we have here. What is up with my chart? The daily fair value gap that we have here. And what do we have here? Another daily fair value gap. This is definitely going to it's going to run up. Like now that I look at it again, we're definitely going to get some buy side. So we have this daily fair value gap. Price might run down, tap it again. Maybe run into this new week opening gap. And then we're going to run on this buy side. Anyways, what I was drawing my attention to, because I wanted to see how macros played a part in this. Let's look at this. Okay, this is the 1-hour chart. Okay. So we're going to dive into price action before this happened. We obviously are anticipating that market runs on these highs for sure. And then we have this high that we're aiming for. So I want to see how we can utilize macros to trade this bias that we have of closing above this fair value gap and then running from it. Maybe creating some liquidity here to sweep. So let's find a New York session. We're in London, perfect. The next session is New York. Okay, there you go. New York started. So I actually want to hop in before this New York session starts because we can trade the opening macro. Let's see how somebody might have gotten caught, like the student that sent out the trade today. So we obviously have this 1-hour FVG bearish, which we want to see referenced as an IFVG to run on the highs that we have outlined, because we obviously just pulled back from a daily fair value gap, right? So we want to be bullish to sweep the highs. So we're obviously bullish, but say you run into this and you note this 1-hour fair value gap, we run into it. It's a 1-hour fair value gap, right? A bearish fair value gap, and we have highs and lows. New York session starts, you're like, okay, look, we just ran from this fair value gap. It just gave me some crazy liquidity. I think I might sell. Okay. So it didn't sweep anything here yet, so I wouldn't have gotten into any buys here. Maybe if it ran here and swept these lows, then that would have been a bullish fair value gap. We could have taken buys from there. But since we didn't, we swept these equal highs. Maybe let's let it one more candle. Okay, that wasn't what I wanted. I wanted it to tap a little bit higher into this so that we can take the sell. But it didn't give me that. I likely wouldn't have taken this trade. But look at the precision anyways. Look at this. All the candles are staying within the 1-hour fair value gap on the 1-minute chart. That's crazy. So what would be the target? It just swept this low here. We're obviously bullish. Let's look for confirmation. Say we missed the buy from here. Let's look for confirmation. We're going to wait for it to close above this fair value gap here. See on the 1-hour or 1-minute chart. We have this fair value gap. Let's wait for it to be closed above. market doesn't close above it, and we run on the lows. We're likely going to run into this, and then we'll take a trade from the macro, a buy, before it closes above. Right? On the 1 hour, I don't want to go on the 1 hour because it's going to show the movement that happens within the 7 o'clock hour. But on the 1 hour, it hasn't yet closed above this fair value gap. So what we can do is we're like, okay, we're still likely to run up for the highs all the way up there. So let's take a buy from this macro once it sweeps these lows right here. It still didn't close above it. Okay, we just got more buy side than we thought we would. Okay, there you go. Macro closes. Maybe you would have gotten this trade. You guys have a different mindset from me. Maybe when you saw this, you would have said, okay, macro ended, we swept the highs, and we still have these lows. Remember gold chart that I was showing you guys right now? Look, I want you guys to understand how it's all the same. What do we have on the daily chart right now? What do we have? Look, guys, this is how I know what's going to happen. We have lows right here, accumulated lows, and a fail to sweep into this fair value gap here. We literally failed to sweep in it. Look at this. We have a low, accumulated lows right here, and a low that failed to sweep into it. So what is price likely to do now? What do you guys think? It's going to run into it. Let's see if it gives us the entry from here. Oh, we never got it. So let's wait for the 7 o'clock to close, which is going to be 7:50 to 8:10 is when we're going to get our entry. 7:50 to 8:10. Maybe, look, guys, I just observed what happens. Maybe it doesn't. So maybe gold runs down, sweeps this low, barely missing the fair value gap, and it runs up again. Who knows? So, the hour hasn't closed yet. But now, no, not yet. Let's mark out the midpoint because we're basically anticipating the 1 hour candle to close above it. So look, we don't want to see it come down into it. We want to see this close bullish. Boom. Look at that, guys. What just happened? The 1 hour chart closed above this fair value gap. 1 hour fair value gap. 1 hour chart, 8 o'clock hour, closed above it. So now all we need is a sweep of these lows and we can ride it to the moon. Boom. Let's get in with our regular lot size, 100. Let's risk the 2.5K that we are able to risk every day. This is NASDAQ. So I'm actually able to risk, let's just risk 2K because this is a wide stop loss. Boom, the 1 hour. Oh yeah, look. We also protected ourselves with that. Boom. So even if it does run down here, we're kind of safe. And then our target is just going to be these highs. And then, let's see, the high at 19227.29. Okay, market's consolidating and it gives us the TP. Boom. Look at that. Even if you just waited all day, didn't end up taking a trade from any of the New York opening or this is a before silver bullet happens. Let's look at silver bullet as well. 850 to 910. 850 910. I know a lot of you can say that I dived into a moment in price action that I knew where it was going. Yeah, I did. That's what you're supposed to do. You're supposed to dive in when you know where it's going. You can literally see what is around it. All I really looked at is the confluences around it. Look, we have this daily fair value gap going on the 1 hour chart. What do we have? We have this fair value gap. This is a little bit dangerous. In Asia session, I typically like to see this fair value gap get swept through. Sweeping these highs. Maybe that's what we'll get before I run lower. Who knows? Okay, silver bullet. What does silver bullet do? Oh, this isn't silver bullet yet. So 850. but it taps back into it. Maybe this time we actually run down to here. Oh, just a little bit lower. Oh, wow. Is this news? Oh, 10 o'clock news. This was today. So on NASDAQ, the 10 o'clock news actually did some damage. We were expecting it to close above it. So now news is over, right? News is over. What is happening? We're still bullish, right? Now we created a equal low that is likely to be swept. 1 hour. I do wish I could see the 1 hour chart right now. Okay, if this closes above it, there you go. We closed above it. We just closed above a bearish 1 hour or 1 minute fair value gap. This might still be a bullish IFVG. So let's just look for a tap back into this. I mean, I'm fine with trading from this because this is a breaker block. I don't want to risk all the profits, but I do want to keep it secure, my stop loss. And we're just going to aim for the high here. Boom. Whew. That could have been bad. That could have been bad. We could have risked our profits right there. But what do we have? We have a IFEG and a breaker block. This was also after news. News did some manipulation towards the opposite side of where we were aiming. News ended up sweeping this 1 minute fair value gap that we were looking at. And we ran towards our target. So obviously we already know that it doesn't sweep it. It just runs down. But to get to that, you can see how useful macros were, right? Now we have the silver bullet. Silver bullet started, ran up without sweeping it, and we know that this came close enough. Maybe it swept enough orders, like we could just get into a sell here. Oh well. I mean, silver bullet just runs from the target. Sometimes it runs to the target, other times it runs from it. So what do we have here? 10 o'clock. It's still closed above it, so I might have just gotten out right here. It closed above the fair value gap and it could still use it bullishly. Yeah, that's a good exit point. Once 11 o'clock hits though, if it closes below it, we could also use this 1 hour fair value gap now to go for sell side. So look, 11 o'clock is about to hit. Basically how this looks, I think I could go to the 1 hour without spoiling it. I did just spoil it. Or did I not? Basically how this looks on the 1 hour is a new 1 hour candle closing below the 1 hour fair value gap. So once this happens at 11, we can actually expect the 1 hour fair value gap to act as a bearish fair value gap again. So if it was to pull back all the way up into it, I would have gotten to a sell from it. Let's see if we get this like later in time. Yeah, there you go. 1 hour. I kind of want to see what happens, but basically I would be bearish from this fair value gap. There you go. Let's look for a pullback on the 1 minute chart. I mean, we kind of have it. So we close below it. We tap into it. I would just get in and factor up for this. There you go. That's kind of what I wanted to see. I'll get into one more trade. Market's already closing though. Let's just say I risk some profits. Boom. Why? Because the 1 hour fair value gap is now a bearish fair value gap. So that's kind of how I traded around this zone. Light work. Those are 2 successful backtesting sessions. Macros are crazy. You just have to know bias. And if you're struggling to trade macros profitably, you just got to go dial in on using your higher time frame bias and knowing how fair value gaps work on the 1 minute chart without actually having to look at it. When you're backtesting, like obviously it's hard to look at the higher time frame without spoiling what happens. But in live price action, you can go to the other like time frame and see exactly what happens. Okay. Oh, remember what I said during today's stream, that gold is likely to draw to this volume void. Fill it up, sell from here. All right, catch you guys.